All right, welcome to another episode of the Crypto Spinter podcast. This one's going to be posted a little late since I got home a bit late from traveling. So, let's get into the news. Russia, billionaires are set to invest into cryptocurrencies. So, basically, a bunch of Russian billionaires are getting super interested in crypto, but as you know, the legal ground in Russia isn't too clear. So, these billionaires investing in crypto might be able to tip the scale into crypto's favor for Russia, and they might have enough weight to make the law from Russia really being anti-crypto to more pro, since they have these high wealth and most likely also high power individuals advocating for it. Next up, South Korea. Financial Watchdog has no plans to regulate Bitcoin trading. Why? Well, this chief of the regulatory agency is saying it's not a legitimate currency. This is for speculation, not payment, and therefore it's not a financial product and will not be considered a financial service. Will not consider any financial services for it. So, sure, this is kind of delegitimizes Bitcoin in a bit, but not having to deal with regulation at this stage is good, even if the financial agency of Korea doesn't really accept it for what it's supposed to be. Spare PC? Well, Chinese giant Baidu is accepting PCs to rent out. So this service is Baidu Jinquang, which translates close to a gold mine. So people will rent out their PCs for either Bitcoin mining, improving live streams, or for esports platforms. Interesting concept of paying people to rent their PCs for all the unused bandwidth or RAM or CPU or GPU, but I don't know how many people will want to do that, considering you'll probably be making pennies, honestly. But we'll see how that works in the future. Sacramento regional transit hackers are demanding 8K Bitcoin ransom. So hacking's becoming way more common now. As Bitcoin prices rises, you can expect more people to utilize cyber attacks and request Bitcoin, and maybe even Monero in the future, because Monero makes a lot more sense. But expect an increase in hack attempts, especially against government agencies and government-backed things. JPMorgan is contemplating providing Bitcoin futures. So JPMorgan's been pretty anti-Bitcoin, but they are actually considering to allow their customers to access the CME Group's proposed future contracts when those come out. Either they're still targeted for sometime in December. So JPMorgan is considering to go back on what their word and saying, yeah, we're interested in Bitcoin enough to allow our customers to do future contracts on it. So the CME Group, yet again, it shows their future contracts is opening the floodgate for a lot of big money. So Wallet Monero is a new website that's most likely trying to steal your Monero. It has no community support, and it is actually has a name that's either exactly it or close to another scam wallet, and it has a very similar layout to it too. So if you're new using Monero, just stick to the official My Monero wallet for now until you can explore confirmed legit other wallets. Usually the best course of action is to just stay with the official wallet if you're really not super technical with all this stuff. But you gotta also be really careful with Google searches because people have been manipulating either AdWords results or just general SEO results or certain search terms to scam people out of their crypto. So just be aware. Next up, Bitcoin mining requires more power than used in 159 nations. So Bitcoin is estimated to be consuming as much as 0.13% of total global electricity consumption. So to put that into perspective, it's using more electricity than Ireland or Nigeria. So don't expect it to stop anytime soon because margins are super good for these miners. They're making the industry as a whole is making at least an upwards of 80% margins. So it'll be interesting to see as Bitcoin develops further in the future. Either of the eventually happenings that happen that slows down the rate, or just a major correction. But we'll see. I estimate that mining will become even more of the total global electricity consumption, and maybe even one day become a serious environmental threat, even if some would suggest that is already a serious environmental threat. So, hybrid ICO from Overstock's tZero, they're building extra services around it. So, as I mentioned before a while ago, Overstock is launching their token, their regulated ICO exchange, and this tZero token is the main thing around it. But now they're including a few services like digital receipts, robo advertising service, online retail brokerages, insurance products, and education services. So they're launching a whole slew of things around this token to give you something to spend on and to have it hold and have that spend option. Basically, I'm guessing they're going to utilize the hold in a way that relates to the ICOs, but Overstock hasn't let too much detail how everything's going to work. They just been listing, saying what they're going to do, which is an ICO platform and now all these other services along with it. Seems like it's going to make it a little bit longer for all that stuff to come out all together, but I'm eager to see what happens when Overstock finally gets it out. I'm even more eager to see when's this estimated date that they're going to launch even one of these things, mainly the ICO platform, but I think we'll have a couple of months because they've been pretty quiet and regulation slow. So getting all that further, make sure they're not violating the regulation I guess they're already under. So that might be slowing them down because the SEC's been kind of watchful eyes of anything around this field that could be a security. So no clue when that's coming out. Hopefully it's within a year, but if it's not, oh well. I'm sure they'll add more junk to have us talk about it. Next up is another hacking story. So public Wi-Fi has cost a man $100,000 in US dollars, basically. So this Austrian man was using public Wi-Fi just to check his portfolio, and then a man-in-the-middle attack happened because he's sending unencrypted data through a unsecure wireless connection, and they just stole or snooping up on the connection, and they just stole his bitcoins from under him. So the lesson here is either check your portfolio with offline methods like an Excel spreadsheet or an app if you care to use an app on your phone, and keep your exchange login information on secure internet connections, not unsecure public Wi-Fi, or you might find that somebody's monitoring that unsecure Wi-Fi, and you ended up losing a lot. So next up is South Korea. A major bank is working on a Bitcoin wallet. So Korea, despite what the financial guy, regulatory officer was saying about not regulating Bitcoin, I think it's actually, like I said, it's posing a good thing, because the bank, it's the second or third largest bank. The Shinhan Bank is custodial services is the main thing, but it's also making its own Bitcoin wallet. So having a bank be something similar to Coinbase, but actually backed up by who knows however like loss protection a bank can offer for Bitcoin, it's good, because like I said, loss protection, since they're a bank, they have that capability, and it will help normal people or even institutional investors to feel safer to know they have that extra loss protection of a bank. But this can also be a double-edged sword, because they get hacked and they have some kind of loss protection guarantee. Look, can spill into the real world real fast, especially if the crypto market is being manipulated by someone else. So an asset management firm, TOBAM, is launching Europe's first Bitcoin mutual fund. So this mutual fund is mainly for institutional investors to get into the currency. So they're kind of like acting as an intermediary to carry the Bitcoin for them and have them have Bitcoin as an option for, I guess, either their employees in some cases or clients. They're basically taking this TOBAM is basically taking all the hard stuff like security and private keys and all that, and just handling everything for its clients. So I think that will definitely have an impact in the long term with kind of easing money in, like the South Korean bank article. Next up, not so good news. Paradise Papers hint at an underlying connection between Tether and Bitfinex. Essentially, the CEOs are the same people on legal paper, even if publicly they say they're separate, they have no connection, but in reality they do have a connection. Same CEO on legal paper. Tether was created years ago, before Tether was a thing, and yeah, this is like a sliver of truth in this Tether conspiracy and this Tether drama. That this is actually something confirmed, that Tether's like the CEO and all these companies are kind of sketch, because they're in obvious tax haven outside jurisdictions to avoid either when things go down and can't get sued, I think, because of the way they're structured, or they could go belly up and the jurisdiction protection, because how they're built with the legal structure. So be suspicious of Tethers, and be suspicious of any exchange that hosts it, because if Tether blows up, it can blow up exchanges that weren't even really part of this little conspiracy. They were just hosting Tethers because they thought it as legitimate when it really wasn't. But so far, all we know is this is a fact, that the CEOs are legally the same, and that Tether is, to this day, still printing more and more Tethers, which is very alarming. So I don't know if I can co-sign the idea that Tether's pumping Bitcoin up higher and higher, and Tether's the sole thing driving up the recent price. But there's definitely some new Tethers in circulation that are doing things that they shouldn't be doing because they're 100% not backed by anything. But we'll see. Hopefully this situation doesn't blow up before the year ends, so we could see a good end to the year with a terrible start to the new year, probably, because Tether won't last forever. But hey, we're passing 9,000. We'll probably pass 10,000 when most people listen to this, and we're going places for now. Next up is Bittrex is dissuading market manipulators with some changes. Major changes are their order minimums, how long orders last, and tick size, which means you have to bet a certain percentage. Like your order has to be a certain percentage. It's 0.1% of the currency's value. So if it was like 2,000 Satoshis, you'd have to have like 2002 or something like that. Like, you can stack micros. You can stack smaller amounts, like 2,000, and add like a 1 at the very end, or then do 2,000 and add a 2 at the end, as you could do now, because that's basically how bots manipulate how order books look on either side. So that's to stop that. Order minimums go up to make it more expensive when, I guess, the bots mess up and the order actually gets stopped, so they lose more money potentially. And then how long orders last. If they went to 28 days. This is the one I'm not even sure is going to have a big impact, because I don't know how much stale orders actually affect their little graphs that display. I guess it was significant enough for them to make that change, but this is the easiest to get around. And the final article here we're going to be talking about is how millions of Bitcoins are potentially lost forever. So a recent channel analysis report basically said 30 to 50% of Bitcoins are out of circulation. Either they're lost or they just haven't been moved by people. So they listed them as lost. As I remember, only around 6 million Bitcoins are in transaction, like active transaction. We have 1 million in Satoshi's original stash, and around 600,000 that was minted. And then I think 3 to 4 million was strategic investors, which I don't actually remember what they meant by strategic investors. Maybe they meant like people who were day trading or something. I'm not sure, but yeah, a significant amount of Bitcoin are in places that aren't moving, which is probably considered one of the biggest reasons why Bitcoin's moving up way more than any other coin potentially could, because it's the first and it's also one with less in circulation than you think. So that it's not 16 million Bitcoins probably. It's probably more of any in the league of 8 to like 12. So as time goes on, obviously more and more Bitcoins are either going to be lost or either lost accidentally or hacked and stuck in limbo, or even lost in transactions and mining accidents. So that will actually reflect in the price. And so if you don't have a full Bitcoin yet, you should probably aim to get one. I know it's been a while since I've had a full Bitcoin, but it's a goal for everyone to have. Because the potential of Bitcoin in 10 years is, let's say, exponential from what it is right now. So, that'll be it for today. Thought it'd be a shorter episode, but it was a pretty moderate length episode. Like, share, all that good stuff. It's like 3 a.m., so sorry if this was... I kind of rushed some of the explanations. But see ya Thursday. Fully rested. I'll give you some real good stuff. Maybe even cover more of this Tether stuff, because this is one of the most concerning things I've seen in a while, honestly. I don't think it's going to be like devastating to Bitcoin as a whole, but a lot of people are going to lose. Going to be on the losing side when this thing finally blows up. And I'll try to stay on top of it, so you guys aren't on the losing side when it does blow up. So see you Thursday. I think I'm gonna have a section just talking about the exchanges that use Tether, just so you have that awareness in case Tether blows up, and you can pull your coins from the exchange early, so you're not at risk. So for the last time, see you Thursday. Share the episode. Prepare for that knowledge on this Tether stuff, because it's big.